I'm CC Underwood. I'm a top producing real estate agent here in Northeast Florida, and in this video I'm going to be discussing all things short sales. What is a short sale? If you think you're in a position to do a short sale, what do you need to get one done? And if you're a buyer looking, how do you purchase a short sale? So this is going to be a long video. I've broken it up into titles if you want to see what video applies to you. So let's go ahead and get started. First things first, what is a short sale? Well, a short sale is when you sell your home for less than what's owed on the mortgage. It could cause someone's property values to drop below what they purchased. There's actually a couple of things. Number one, the market could change. So in real estate, you make your money when you buy, not when you sell. A lot of people think when you sell, that's when you make it, but when you sell, is how much you make on your sale of the home is largely dependent on at what point when you purchased and how long you've been in the property. So a lot of people purchase a property and have an expectation that property values always increase. Now, over time, if you're looking over a 7 to 10 year period, more than likely you are going to see that a property value has in fact increased. Because it's not necessarily timing the market that matters, it's time in the market. So back in the crash in 2007, this is when I got my license. I actually purchased my first home and performed a short sale on my own home. So not only was this my primary source of business of helping homeowners avoid foreclosure, it was something I personally went through myself. And short sales aren't as scary as you think. So that's exactly why I'm breaking this down for everyone. So the market could lose value. It could go into a buyer's market. One other way that you could lose value is by the percentage of money you put down in relationship to when you need to sell. So oftentimes we did see this back in the crash because people were doing 100% financing and then needing to sell. So there was no equity, and the lack of down payment combined with the decreasing market values, it was a negative combination. When homeowners needed to sell, there was no money. They had no money to pay compensation. They had no money for their closing costs, and they didn't have the money from the sale to pay off the mortgage in full. And so a short sale is essentially shorting the bank on the mortgage of how much you owe. It's not paid in full, it's paid in short. So those are a couple ways that a short sale might happen, but who actually performs a short sale? Back in the crash, it was kind of a negative stigma to go through a short sale, and many people were embarrassed to go through a short sale. But as someone who helps so many homeowners avoid foreclosure or performed a short sale on their home, I can tell you there were so many stories and a number of reasons that a homeowner might choose to do a short sale. So the first reason might be financial, and that was the most common. But financial, the cause of the financial could look different for every situation. The first financial situation could be that you had a job loss. So if you had a job loss, which caused you to miss mortgage payments, and therefore you did not have enough money to pay for your mortgage, then that might be a reason to do a short sale. Many homeowners were attempting to do a loan modification, but oftentimes what they found is it took 60 to 90 days to go through a loan modification. The bank would ask them to do something else. It would take an additional 90 days, and then they were denied. So they went 6 months with missed mortgage payments, which raised how much they actually owed, only to be denied later. Or many times those loan modifications, if they were approved, it was simply to take the number of missed payments and tack it on to the back of the mortgage. Again, raising the amount of what's owed, and when you raise your loan amount, you raise your monthly payments. So oftentimes when people were in a job loss situation, they simply didn't have the funds. They couldn't even afford their regular mortgage payment, let alone the new increased amount. The other situation we found homeowners in was medical. They had a medical situation that arose in their family, and those medical bills started to increase rapidly. They weren't sure what to do, and so they really couldn't afford to pay the mortgage and all the medical bills. They felt overwhelmed and stressed, and overall those medical situations took a financial toll on their family, and the only way out was to short sell their home. The third situation of someone who performed a short sale was a job relocation. And again, not just the job relocation, but maybe the person had purchased the home 12 months earlier and the market hadn't adjusted, and maybe they were a VA loan or FHA where they only put down 3.5% or no money down at all. The market didn't increase over the next 12 months and they had to move. So whenever you sell a property, you also have your own set of closing costs, just like you do when you purchase. And those closing costs can be anywhere from 1.5% to 2% of the purchase price, in addition to any type of negotiated repairs needed after the home was under contract, as well as real estate agent compensation. And so the market had not yet increased enough to provide enough equity to sell the home to pay off all the debts. And in those situations, a short sale was necessary. Many of those situations were homeowners who were living in their property. They were owner occupied and it was their primary home. Now, we also saw where investors were also performing short sales, again, largely due to the market. So there were landlords who owned homes who had tenants in place that they experienced the financial hardship, many of the other hardships that I just spoke about for the primary owners, except they were a tenant. And because of their financial loss, they weren't able to pay their lease payments, and therefore the owner the landlord was not able to pay their mortgage payments, which put them behind. Now, this was a very sticky situation. However, things do happen, and many owners and investors rely on the tenant's payments in order to make the mortgage payment every single month. And so it did put landlords in a situation where they needed to perform a short sale. And in many cases, they were needing to evict the tenant in those situations or perform a short sale while the tenant was still in place. So what type of documentation is needed to perform a short sale? As I say to homeowners, what got you into the home is going to get you out of the home. And what I mean by that is all the financial documentation that you needed to prove to the bank that you were worthy and qualified to purchase the home, that you had enough funds to purchase the home, is the same type of documentation that you will need to prove to the bank why you cannot afford it. In short, you need to prove financial insolvency. You need to prove to the bank that there was a situation that happened and a sequential events that led up to you not being able to either A, pay for your monthly mortgage payment, or B, sell the home enough to pay off the mortgage and all the closing costs and compensation in order to move forward, and that you don't have enough funds to bring to the closing table. So let's review some of those documents that are needed. If you do remember, you will need bank statements. Typically, you are going to need 60 days of bank statements, 60 days of pay stubs. You are going to need 2 years of tax returns. You will also need to fill out a 4506T, if you remember. So they're going to verify and pull transcripts from the IRS, so no cheating. They do like to verify the same way that they verify it when you're getting a mortgage, just to make sure what is submitted matches what the IRS has and there weren't any types of modifications. You're also going to submit all other financials, 401ks, savings accounts in all areas. If you own multiple real estate investments, if you have business, all of your financials need to be submitted to the bank. And that is just financial documentation. In addition to that, each bank that you have a mortgage with is going to have what's called a short sale package or a loss mitigation package. Oftentimes, it can be found on their website of the actual bank or servicer in the loss mitigation. In that package, it's going to detail other forms for you to sign, some of which may need to be notarized. They will provide a checklist of many of the financial documents that I just went over. And it's a great checklist to show you everything that you need to have in order, along with the short sale package filled out by each bank. So if you have 2 mortgages, then you will have a short sale package for your first, your primary, and your secondary. Many of it will be the same documentation, but their packages may be slightly different that they have that they want you to fill out. So you're going to have 2 if you have 2 mortgages. In addition to all that paperwork, they're going to ask that you write a hardship letter. Now, this is not, I can't afford my mortgage payments. I can't do this. That's not what it is. Again, this is you asking the bank to take less than what's owed. So you need to provide the reasons. There was a medical emergency. Someone in the home was sick. One of our immediate family members was sick. We needed to provide transportation. We needed home care. I lost my job. I went out and I applied at 40 different jobs. I could not get a job. Or the jobs that I was able to get and get hired for did not provide enough income to cover all finances. The bank is going to ask you to fill out a financial report. It's going to list all of your income, all of your assets, and all of your expenses, even your going out to the movie expenses, because that is a part of life. And so at the end of the day, they're going to want to see that what you have coming in is not enough to pay for what is going out. Again, you're proving financial insolvency or a financial hardship, whether that be short-term or long-term. So once all this is filled out, all that paperwork gets set aside, your home goes on the market. So you will also need to hire a real estate agent. You do need to talk with a real estate agent before you do any of this. So this is my one tip. Well, I'll have many. Hire a real estate expert in short sales, not your friend. This is not a regular traditional real estate sale. Just because they've helped you in the past, you need to specifically ask them, were they around when short sales? Have they performed multiple short sales? Do they have a short sale negotiator? No real estate agent should be negotiating your short sale. They need to have a professional negotiator or attorney involved to do this for you, to make sure that the proper forms are submitted and the proper language is asked for your short sale. This is not in the real estate realm of our scope of practice. We all learned it on our own because there were no short sale companies back then. Now there are. And so because of all of that, we learned the real reason we don't do these. So you want to make sure that you are reaching out to a real estate professional very, very, very early on to have these very personal conversations so that they can walk you through this process and the steps so that you know exactly what to expect. So now that you have your home does need to go on the market. It needs to be formally listed. This does not mean that it is publicly marketed as a short sale. This can be private information. Now, there are short sales who homeowners have missed payments, and short sales where homeowners have not missed their payments. It's not always a guarantee. So what I will say is, if you have missed your mortgage payments, if it's been more than 90 days, it will become public information. Your phone will start to ring. People will show up at your doorstep. They will leave packages at your home. They will mail advertisements to you. They will mail letters to you. You will get multiple phone calls from investors and your bank. Many people claiming that they're going to help you. And this is another reason why it's so important to reach out to someone as early as possible. That way you can say, I've already hired a professional to help me in my situation. And then you can just be done with it and you won't be confused on what to do next. So you and your real estate agent will prepare the listing paperwork that will be a part of the short sale package. Your home will go on the market and you will market the home for a buyer, and then you will go under contract. So the bank's paperwork, the financial paperwork, the listing paperwork, and the contract purchase and sale agreement paperwork all together make up your short sale package. This is easily over 100 pages. So it is very important that everything get together and be put together in one complete package, because this does affect you. And again, another reason why hiring a real estate short sale expert is going to be so important. So how long does a short sale take? Once you have your complete short sale package and your home is under contract, that is when you are going to submit paperwork to the bank. Your real estate negotiator or attorney, they're going to submit all that paperwork to the bank to start the short sale process. That paperwork is going to go into their loss mitigation department, and you will be assigned a short sale negotiator on that bank side. Once they have all the paperwork, they're going to send out either a local real estate agent or a local appraiser to do what's called a BPO. This is a broker price opinion. Now, in some cases, it could be an appraiser doing a formal appraisal. And they do this because they aren't going to trust what your homeowner, what your real estate agent says it's worth, they truly do want to have a third party's opinion of not only what the home is worth, but what the actual real estate market is doing and what the trends are. So it is, again, important that your real estate agent, they will have an opportunity to talk to this person and that they are extremely knowledgeable about home pricing, values, and the real estate market. So they're able to advocate for you to this person performing the BPO. Getting the BPO can be anywhere from 30 to 45 days. Once it's performed, they'll send it back into the short sale bank and they will come up with a decision. That decision could take an additional 30 to 45 days. Now, back in 2007, short sales were taking anywhere from 7 to 12 months to get a response. It was in large part because they didn't have enough people to service the sheer volume of short sales that were being processed. So now that things have calmed down quite a bit, on average, 60 to 90 days to get a response, and then the traditional 30 to 45 days to close on the buyer side. Now, having said that, every bank is different. Every bank is different. Every servicer is different. They will have their own timelines. Credit unions are different. The type of short sale it is can have a variable on this. The number of mortgages you have will have a variable on this. Additional liens. The more liens you have, the longer it can take. That's the more that you would need to negotiate. So the less liens, the faster, and the more liens, typically it's going to take longer. So if you have a first mortgage, a second mortgage, you have a water softener lien, you've got solar panels, you've got the HOA that you haven't paid in 2 years or 6 months. All those things are going to delay the short sale. That's multiple people that will need to be negotiated with. And so if at all possible, you want to stay current on as many of those loans as possible. If you do find yourself in a position where you're unable to afford it, the very, very least, make sure you're staying current on your homeowners associations, because homeowners associations in Florida can foreclose on a home. They don't all like to, however, there is quite a bit of history of homeowners associations foreclosing on homes in order to make their money back. So you definitely want to stay current, and they tend to not negotiate as well as some of the other lien holders we've had experience with. A lien holder is anyone that puts a lien on your home in exchange until the full payment is received. Water softener companies, if you finance them, will likely put a lien on the home. The same way if you finance a roof, will put a lien on the home. And if you finance solar panels, they will put a lien on the home. I don't recommend solar panels here in Northeast Florida, but that is for another video. So does a short sale affect your credit? Again, as someone who went through the short sale experience herself, and I missed payments, I made that conscious family personal decision to miss my mortgage payments because of the financial situation I was in. It was very purposeful and thought out. Having gone through that short sale, yes, it did take a hit to my credit, but here's what I want to say. I was very diligent and staying current on everything else. So my missed payment was my mortgage payment. The hit to your credit isn't so much the short sale itself as it is as much about the number of missed payments. So if you were able to get a short sale approved without missing any mortgage payments, your credit score only might be slightly dinged. However, if you are missing 30 days, 60 days, 6 months, 12 months of mortgage payments, it's a running history. So remember, your credit score is dependent on the most recent, like the majority of the weight is dependent on your most recent 24 months of activity. If you only missed 90 days of payments and you were able to get a short sale approved, then that's going to be a slight dip. Credit scores are really volatile, so they can go down, they can also rebound very quickly. And if you're staying current on the rest of your payments, it will help to reboost that once the short sale is completed. In many cases, the short sale, your bank is going to report to the credit companies settled debt less than amounts owed. It's not likely it's actually going to say a short sale. And here's another benefit to a short sale. Whenever you're filling out loan paperwork, whether it be for a mortgage, a car, a lease application, apartments, there are several financial questions on that sheet. It doesn't ask you if you've had a short sale. It does ask you if you've ever been foreclosed on, if you have foreclosure, and if you've ever had a bankruptcy. So this is a huge benefit to doing a short sale because it's like a settled debt. And you did repay some of the debt, unlike a foreclosure or a bankruptcy where you're just done with it. Certain bankruptcies, you're just kind of washing your hands of it. So it is actually a lot better for you in your credit. Now, what if you want to purchase a home after a short sale? How long does that take? Again, because your credit is largely based on the most recent 2 years of credit history, you're going to want that to fall off. And most mortgage companies will want that to fall off as well. So anywhere from 2 to 4 years. And there's a lot of variables. So the type of short sale that you had, the type of loan that you're going to be getting, again, your new loan, how much money you're putting down, and of course, what your credit looks like. So anywhere from 2 to 4 years is average. And depending on if it's a VA, FHA, or conventional loan, you just want to talk with your mortgage professional about what that looks like. Many homeowners do ask us if they should just go ahead with a bankruptcy. If they're to the point where they've missed a lot of mortgage payments, should they say, I'm just going to do a bankruptcy because I've also missed, I have credit issues, there's a lot. Now, if you want to talk with a bankruptcy attorney, that is perfectly okay. However, one thing I do want you to consider is that the bankruptcy handles the debt, not the deed. And what I mean by that is the bankruptcy is going to take care of all that debt, whether, depending on what bankruptcy you do, whether it is a reorganization or a total wipeout. I don't know much about that, so please talk to your bankruptcy attorneys about that. However, when the homeowners that we have helped in the past, whenever they performed a bankruptcy, they still needed to sell the home. So in the past, whenever the homeowners did a bankruptcy, if they did not sell the home, then the home was foreclosed on because the bank still needs a sale in order to get the deed back. There still has to be a transfer of deed. And so you really want to work and talk with your bankruptcy attorney and let them know that you would like to do a short sale on the home. If your bankruptcy is enough to carry the debt, my personal opinion and my professional advice would be to do the short sale and keep that separate from the home and keep the home out of the bankruptcy. And then utilize the bankruptcy attorney for any other debt that you have going on. But again, you want to keep open communication. Every situation is different. So you really want to just talk with every professional and make that best decision for you. Because I don't see, me personally, I wouldn't want to double whammy a bankruptcy and a foreclosure if I could just simply do a short sale and avoid it all and not have to report any of that on any future loans. Again, whenever you're filling out new loan applications, they do ask you if you've had a foreclosure or a bankruptcy. And those are dramatically going to affect your credit and credit worthiness in the future, unlike a short sale. Short sales, just because you see a pre-foreclosure online does not necessarily mean it's a short sale. It also doesn't mean that it is for sale at all. So please do not go up to someone's door and say, hey, I see you've missed your mortgage payments. Respect people's privacy. And again, now if you've watched this video, you know that they need to put the home on the market. It needs to be for sale in order for you to purchase it. If you're looking to purchase a short sale, again, you definitely want to talk with someone, a real estate professional that understands short sales. Now, there's not a lot, however, they are always going to be around. There's always going to be a situation where someone purchased a home and has a personal or financial situation in which they will need to sell the home and they cannot sell it for what's owed. So what happens if you see a short sale, if you see a pre-foreclosure online? A pre-foreclosure means that the homeowner has missed about 90 days or more of their mortgage payments. And again, if someone has missed 90 days of mortgage payments, they're likely going through something financial that is personal and private. So just because you see pre-foreclosure does not mean it is for sale. Your real estate agent can tell you if that home is for sale or not. And last question I typically get is, will I owe money if I do a short sale on my home? So there are several options. Whenever it's your primary residence, and again, this is why you want a professional and a short sale negotiating expert on your side, because this is where the language is so important. Whenever you are asking the bank to short themselves and perform a short sale, there is certain language that you want to ask for from the bank in order to, essentially you're asking them to take it for less than what's owed, and that you don't have to repay that money. There is certain language in there. That typically will happen on a primary residence, but every situation is different. If you are someone that does have a lot of cash and the bank sees that and they say, hey, we're going to let you wipe off $100,000 in debt, but we want you to still pay us back $15,000 in the form of a promissory note. That's a good deal. You take that all day long and twice on Sunday. Do not walk away from that. Essentially, they're writing off $100,000 and you only have to pay $15,000. That's a good deal. That is a fantastic deal. Now, on investment properties, we saw promissory notes way more often. So let's say the bank wrote off $50,000, they might go to that owner and say, hey, look, your home is worth $200,000. You were upside down $50,000. We're going to take the $200,000. We're going to be upside down, but we still want you to pay that $50,000 back. Be it, 0% interest over 10 years, whatever that promissory note looks like. Again, I would really look to consider that, because typically what happens, it's a promissory note and it is unsecured debt. An unsecured debt is kind of like a credit card. Like, it's not being attached to a home or anything. It's not a lien. And oftentimes they'll get sold to a collections agency or an attorney, where you can even further negotiate the promissory note down, just like you would a credit card or student loan. And you call them up and say, hey, I got a pile of cash. I know I owe 50, but if I give you 10 today, would you take it? There's all types of strategies. They may not. This is just not even a full example, but giving you an idea of why taking the promissory note could still be in your advantage, could still be positive for you. Now, depending on the type of short sale that you had, it's going to be dependent on the loan. So if you took out an FHA loan, you're going to have an FHA type of short sale. Same thing with conventional, Fannie Mae, Freddie Mac. And if you're a VA, then you're going to have a VA short sale or a compromise sale. What they agreed to take on the value of the home is all going to be different. Early on, people were getting in fantastic deals whenever they were buying short sales and selling short sales. The average price was also $125,000. The kitchens were ripped out, and the buyers were so excited to get a home that they could renovate themselves. It was so good. Now that home values have increased, and more often than not, the home is in good condition, the bank is going to want the home to be in good condition. They are also going to want probably a higher point. They're likely going to want a higher percentage of market value. So if the home is worth $200,000, they might come back and say, hey, I'm willing to take $190,000. Some banks want 95% of the market value. Some want 90. Some might even go down to 85%. It's not like you're going to get the house on a BOGO deal. It's not half off. So whether you're buying or selling, understand that the home is going to be valued in the current condition of the current market. So if the home is in really good condition, it's move-in ready, you're probably not going to get 20% off the value when you purchase. And again, this is still a win-win for all. So are there any fees to selling whenever you sell a short sale? So in a traditional sale, if you're going to sell your home, you're going to pay your own closing costs. You are going to pay real estate compensation, and you are going to be paying for a lot of repairs, more than likely, in order to get the home sold. So what's different in a short sale if you don't have funds available? Number one, the bank is going to take care of the real estate compensation. Even though you, the seller, are signing a contract, everything is still contingent on the bank's approval of the short sale. Part of the bank's approval of the short sale are a list of fees that they are going to pay out of the purchase price, which would be seller closing costs. They're going to pay real estate compensation. Potentially, they might pay buyer closing costs. They will pay buyer real estate agent compensation. Oftentimes, they're not making repairs, so that'll be between you and the buyer if you want to contribute towards repairs. If you have funds or you have a friend and there's an agreement that can be made that repairs will be done so that the buyers can get financing or get insurance, then you want to go that route. Otherwise, if it's not financeable, you're going to be looking for a cash buyer investor anyway, or a renovation loan from the buyer on the other side if you don't have the funds to fix anything. more than likely the bank is not going to allow an owner to contribute funds at the closing table and not walk away with money at the closing table. But the benefits of a short sale are that you avoid foreclosure, you have this massive debt and massive headache and massive stress that's been eliminated from your body, from your world, from your family, and you can start to begin to rebuild your credit, rebuild your finances, and go towards that life that you had. And again, as someone who went through this, it was my very first home. I had a lot of memories. My kids were born there. And I still ended up making that decision because it wasn't about the right now. It was about my future and my 20, 30, 40, 50 years I had left to live in this world. So the fact that I was leaving a home and giving it up in a short sale, in the grand scheme of things, when you have that perspective, when you can reset your finances, it was one of the best decisions that I ever could have made for myself and my family. It got us on the right track. We got rid of debt that we really didn't need. We reset our budgeting, and we actually did wait the 4 years and were able to purchase a home. And it was one of the greatest investments that we ever made, was that first home we purchased after the short sale. So good times don't last, bad times don't last. Don't worry about it. Just make the sound financial decision. There's a lot going on. If you need someone to talk things through, make sure that you message me. If you're not Northeast Florida and you're needing to have these conversations and want to get connected with a professional in another city or another state, make sure you reach out to me as well, because I will connect you with a professional who has these services on hand. And short sales are done very differently in multiple states. So I want to get you with the proper expert. If you need anything at all, make sure you follow our page. Make sure you reach out to us. We're here, and I hope that you've learned a ton about short sales.